Hello everyone, this is lesson number 13 of the Options Are Easy series. And today I'm going to analyze the popular option strategy Iron Condor. I will start by opening the option board of the AE web terminal. Then I select the closest monthly series. Right now the Bitcoin futures price is 29,500 and I choose the following strikes. Let's say I sell strike 28 put options minus 1,000 contracts, and I'll also sell strike 32, for example, minus 1,000 contracts. You can choose any quantity as long as they are equal. On the chart we can see the familiar strangle strategy, but now we will buy neighboring strikes, put options of strike 27 and strike 33, 1,000 contracts in both cases. That's how we get the Iron Condor. What's so good about this strategy? You have already realized that the strategy is actually a strangle, but with levers, both on the left and on the right. I tell you right away that in this strategy the risk is limited, which means we will not get a loss greater than the wing of the Condor. This is a good strategy if you really envision such a move and are willing to take such a risk, which frankly is more than a profit. Let's turn our attention to P&L. $305 is a potential profit with margin requirements of $695. The maximum risk if you decide to do nothing, not to manage the strategy, not to use delta hedging, not to roll sold strikes. In this case, the maximum risk will be $695. The risk is equal to the margin requirements. This is the case with every strategy that has purchased options. Gamma is negative, delta is somewhat neutral, and the strategy applies that we will stay in the range of the purchased strikes. If Bitcoin stays within the range of 28K to 32K before expiration, no loss points are located at 27,600 and 32,300. How to manage such a strategy? You can roll it. If the price rises a lot, you can apply a rolling. On the right we have a sold call spread, and on the left we have a sold put spread. The sold call spread can be rolled to the right side. You can apply the roll to the Iron Condor in its entirety. I used to trade Iron Condors and I used to roll them in their entirety. The robots in the AE terminal can apply rolling for the entire structure. These robots can do multiple operations as one instrument, so-called basket trading. More on the pros of this strategy. It is vega negative, yet theta positive, which means that the time decay is working for us. If the price stays in the sold strike range, we get this profit cap. The strategy also has a significant advantage over a regular strangle. The Iron Condor becomes more suitable for us due to margin requirements. The Iron Condor has less margin requirements than a strangle. So look. $695 is the margin requirements for this Condor. Now I'm going to remove the levers I bought, and we're looking at the margin requirements of a regular strangle. $4,142. The margin requirements is now almost 7 times more. That's why I favor the Iron Condor. Any strategy where risk is limited with purchased leverage has reduced margin requirements. So here's homework. Build a similar strangle at the AE terminal. It is easy to do. Sell the strangle. Buy levers that go next on the strikes line. Call on the right, put on the left. And that's how you get the Iron Condor. The Iron Condor shows good returns. But I'm not a big fan of this strategy, to be honest, because I don't agree with its high risk. It has 2 or 3 times the risk as the potential return. I lean forward strategies where you have to actively control the process, use rolls and delta hedging. As a reminder, an Iron Condor can be rolled. If the price moves to the left, we roll a put spread. If the price goes to the right, we roll a call spread. Look to the Matic futures, Dogecoin futures, and then you'll see that in more volatile cryptocurrencies, the Iron Condor works better, because highly volatile options have a higher price, hence a higher cap. They have a wider range of no-loss points, so lesser risk. However, their basic assets are also highly volatile, so be careful. Homework assignment number 2. Construct charts with different cryptocurrencies, Bitcoin, Ether, Matic, Dogecoin, and compare them with each other. And I guess that's the end of our lesson. I wish everyone a successful trading. Subscribe to the channel. I believe we have the best channel about options trading on the stock exchange. Leave a like, ask questions, I answer all of them. Alright, goodbye.